Welcome back to Solo Mega Machine. And buckle up, because what just surfaced could be the biggest signal yet that institutional money is finally moving into XRP. Franklin Templeton's XRP ETF has quietly appeared on the DTCC listing under the ticker XRPZ. And if you understand what that means, you already know this isn't a rumor. This is the back-end infrastructure of Wall Street quietly preparing to turn the key. Now, think about that. The Depository Trust Clearing Corporation is where almost every major financial instrument in the United States clears and settles. ETFs don't just show up there by accident. For an asset to be listed on the DTCC system, all the technical compliance and custodial frameworks have to be built first. So when you see Franklin Templeton, one of the largest asset managers on the planet, linking an ETF called XRPZ to that system, it's a flashing green light that they're ready to roll as soon as final approval hits. This isn't speculation anymore. It's infrastructure being locked in. That's how institutional adoption always starts silently behind the scenes while retail traders argue about daily price swings. Remember when Bitcoin ETFs started to appear on the DTCC preview list before launch? People called it fake until trading opened, and then billions flowed in within days. We could be staring at the exact same setup right now for XRP. But here's where it gets even more interesting. This move doesn't stand alone. It lines up perfectly with the timeline for ISO 2022 global integration. On November 25th, the standard becomes mandatory across the banking world. No more delays, no more grace period. Any bank that wants to stay connected to the global settlement system has to be ISO 2022 compliant. And what's the backbone tech for that system? Distributed ledger technology in the same architecture Ripple has been building and testing with central banks for years. Out of every blockchain company on the planet, only 2 sit directly inside the ISO 2022 working group, Ripple and Stellar. That's not a coincidence. That's the foundation layer for what's about to power global payments for the next generation. So while the crowd keeps waiting for headlines about XRP going to $1, the real story is that financial plumbing worldwide is being rebuilt, and XRP is literally inside the pipes. Franklin Templeton stepping in now tells you something. Institutions want exposure before the switch flips. They're not reacting to price, they're positioning for infrastructure dominance, and when that ISO 2022 migration finalizes, money that's been sidelined for regulatory or logistical reasons will finally have the green light to move through compliant rails. That's where tokenization, settlement, and liquidity all converge. And XRP was designed exactly for that use case. So the real question isn't if this ETF becomes active, it's when. And when it does, you'll see a narrative shift so fast, most people won't even process it until after the first liquidity wave hits. The dots are connecting exactly like they did before every other major crypto breakout. Long consolidation, silent institutional buildup, and then an explosive repricing once the infrastructure goes live. What's happening right now isn't hype, it's preparation. Franklin Templeton, ISO 2022, Ripple, all lining up inside the same 30-day window. If you've been waiting for a signal that XRP's role in global finance is real, this might be the loudest one yet. Now let's dig deeper into what's actually going on here, because the Franklin Templeton XRP ETF isn't just another listing or rumor floating around crypto Twitter. This is a clear indicator of institutional alignment, the kind of move that only happens when the groundwork is already finished. The DTCC doesn't allow placeholder symbols or speculative tickers. If XRPZ is showing up there, that means backend systems, custodians, clearing agents, and data pipelines are already configured to handle it. In other words, they've quietly built the bridge. Here's the thing. Franklin Templeton manages over $1.5 trillion in assets. These guys don't chase retail hype or unverified speculation. They make data-driven, long-term plays in sectors they know are about to explode. For them to build an XRP product means they're anticipating massive future liquidity and demand, and they want exposure before the mainstream even realizes what's happening. That's exactly how every institutional cycle starts. Silent accumulation followed by public rollout, and this is where the timing gets surgical. You've got Ripple coming out of the SEC case with a regulatory edge, something no other crypto project has right now. XRP is one of the very few assets in the US with legal clarity on its non-security status. Combine that with ISO 2022's final adoption this November and a tidal wave of tokenization projects from BlackRock CK City and BNY Mellon, and you can see how the puzzle fits. Franklin Templeton didn't randomly pick XRP. They picked the asset most likely to dominate compliant settlement rails in the new financial era. Let's be real. This isn't a retail-driven story anymore. This is a Wall Street pipeline activation. You've got major liquidity providers, ETF custodians, and compliance networks syncing XRP's technology with global payment infrastructure. That's why you're seeing quiet accumulation phases despite flat price action. Whales and institutions aren't waiting for social media confirmation. They're building positions while volatility is low. Now, here's what a lot of people miss. ETFs don't just affect investor exposure, they rewrite liquidity flow. When an XRP ETF goes live, it creates automatic demand loops. Market makers, authorized participants, and arbitrage desks will need real XRP to back institutional flows. That's real on-chain demand, not speculation, not leverage, not futures contracts. Actual liquidity being locked and cycled. Remember what happened with Bitcoin ETFs? Once they launched, it wasn't retail traders driving price anymore. It was institutional rebalancing. Pension funds, hedge funds, and portfolio managers started integrating Bitcoin exposure into standard allocations. XRP could be next in line for that exact transformation. Except this time, it's linked to real-world utility, cross-burst settlements, banking integration, and ISO compliance. The biggest misconception right now is that XRP's slow movement equals weakness. It's the opposite. The market is compressing while fundamentals go parabolic. You've got Ripple expanding into institutional custody, CBDC testing in multiple countries, and new liquidity hubs being built across Asia, the Middle East, and Latin America. That's not noise. That's global infrastructure alignment. And let's be honest, most retail investors won't notice until the chart breaks out. That's exactly what happened before 2017's parabolic run and again in 2020. Long consolidation, disbelief, and then an overnight revaluation. You can see the structure forming again, higher lows, stronger on-chain accumulation, and macro conditions that almost guarantee capital rotation into compliant digital assets. Now here's where everything starts to click together. Ripple's strategy isn't random, and it's not reactionary. Every move they've made over the past 24 months has been about positioning themselves as the institutional backbone of this new tokenized financial system. You've got Franklin Templeton building an XRP ETF on one side, but behind the curtain, Ripple's been expanding in ways that set them up to handle the kind of liquidity that ETF demand will unleash. Let's start with what they're really doing. Ripple isn't just pushing payments anymore. They're acquiring infrastructure. The acquisition of Mako gave them full control over institutional-grade digital asset custody. A massive step because you can't have ETFs or institutional tokenization without secure, regulated custody solutions. And Mako already serves top-tier banks in Europe and Asia. That means Ripple isn't waiting for the ecosystem to evolve. They're buying the critical pieces and integrating them directly into their network. And that's not all. Ripple's been aggressively expanding its liquidity hubs across the Middle East, Singapore, and Latin America, regions where cross-burst settlement volume is exploding. These aren't hype partnerships. These are operational pipelines that connect regional banks, payment providers, and remittance corridors directly to Ripplet and on-demand liquidity, ODL. You don't expand into those areas unless you're preparing for serious institutional throughput. Now, think about how all this lines up with the global trend toward tokenization. BlackRock, CK, Fidelity, and NASDAQ have all made it clear that tokenized real-world assets from bonds to real estate are the next multi-trillion-dollar market. Tokenization only works if there's a trusted settlement asset, a one that can move frictionlessly, instantly, and at scale across jurisdictions. Ripple's positioning XRP as exactly that asset, not a speculative coin, a utility-driven liquidity bridge for institutional finance. And here's the bold truth. Most projects claiming enterprise adoption are still stuck in the sandbox phase. Ripple, on the other hand, is already integrated with central banks testing CBDCs. Their tech isn't being pitched, it's being piloted. The National Bank of Georgia, the Central Bank of Colombia, and several in the Middle East are running pilots with Ripple's blockchain framework. Every one of those programs adds legitimacy and strengthens XRP's position as the bridge asset for tokenized settlements. Let's be real, this isn't about hype cycles anymore. Ripple's playing a long strategic game. While others chase temporary price pumps, Ripple's securing global licensing, compliance, and partnerships that will outlast every bull run. That's how serious institutions operate, and they don't gamble on narratives. They build infrastructure around assets they know will be regulatory approved and interoperable. And right now, XRP checks both boxes. What this really means is that Ripple's no longer trying to convince the world of its value. It's quietly embedding itself into the system. And if you're wondering why BlackRock, CK, Franklin Templeton, or Citi are even looking in this direction, it's because Ripple's framework solves their biggest problem: instant liquidity settlement across a fragmented global system. That's the holy grail of finance. And it's the exact thing XRP was designed for from day one. So while the crowd still debates charts, the real players are setting the rails for the next monetary layer, and Ripple sitting dead center in that convergence. ETFs, ISO 2022, tokenization, CBDCs, all roads lead back to one asset built to handle it all. The irony, by the time most people realize what's happening, the infrastructure will already be live. Ripple's not waiting for approval, it's building for dominance. The reaction across the crypto and finance sectors has been nothing short of electric, but also divided. On one side, you've got top analysts and institutional insiders calling this Franklin Templeton XRP ETF, listing a turning point for crypto legitimacy. And on the other, you've got skeptics who still think XRP is just a banking coin. But here's the uncomfortable truth. Those skeptics are running out of ground to stand on because every major signal from the institutional world is pointing in one direction: integration. Let's start with what we've heard from inside the industry. Analysts tracking DTCC movements have confirmed that the listing wasn't a database error. It's deliberate, structured, and consistent with pre-launch patterns we've seen with Bitcoin and Ethereum ETFs. That alone sent shockwaves through crypto circles, because if XRP joins that ETF lineup, it becomes the first fully compliant, utility-backed digital asset traded at institutional scale. That's a game-changer. And it's not just retail analysts saying this. BlackRock CK's Larry Frink and Citi's institutional team have both emphasized that the next trillion-dollar wave in digital assets will come from tokenization and settlement infrastructure, not speculation. Ripple's entire architecture was built for that. Meanwhile, Ethereum's struggling with scalability, Solana's fighting reliability issues, and Bitcoin, let's be honest, doesn't real-world settlements. XRP is the one asset that's regulatory cleared, ISO compatible, and already integrated with financial rails. That combination is lethal in a good way. You've even got traditional banking heavyweights like BNY Mellon and HSBC quietly building custody solutions for tokenized assets. Why? Because they see what's coming. Trillions in tokenized securities, bonds, and cross-border instruments, all needing a bridge currency. Ripple's XRP ledger doesn't just move money. It settles value instantly. And finally, that's a level of utility that puts it in a completely different league from 95% of the crypto market. Now, the industry is not stupid. They see where this is heading. Some analysts have even compared this moment to the early days of the internet ETFs, where only a few people understood how massive it was going to get. Those who dismissed it back then were the ones left behind. The same playbooks repeating now in crypto. Slow accumulation, institutional infrastructure, retail disbelief. Every signal screams that we're entering a structural shift. The Ripple Swell event only amplified this narrative. When you've got BlackRock City and BNY Mellon executives on stage openly discussing trillions in tokenized assets, that's not a conference flex, and that's an industry direction statement. And Ripple wasn't just attending, it was co-hosting. You can't ignore that. The institutions are already coordinating the next financial framework, and Ripple's tech is sitting right in the middle of it. Let's also not forget regulation. While the SEC still plays politics with Ethereum and Coinbase, Ripple already has a judicially confirmed status that XRP itself is not a security. That clarity gives institutions something priceless, legal protection. It's the difference between maybe and approved. And when you're talking about billion-dollar asset managers, that one word changes everything. So when you connect these dots, the DTCC listing, Franklin Templeton's involvement, the ISO 2022 shift, Ripple's global presence, and the open endorsement of tokenization by financial giants, it's obvious what's happening. This isn't retail speculation anymore. It's a global infrastructure migration, and XRP is one of the few assets already integrated into that new system. The broader implication, we're witnessing the start of a financial convergence between traditional banking and blockchain. This is the exact bridge moment that crypto was supposed to create, except it's happening through the one project built to work with the system, not against it. And if history tells us anything, the crowd always laughs right before the breakout. Here's the thing, most people are still underestimating how close we actually are to the tipping point. This Franklin Templeton XRP ETF listing isn't some rumor or retail hype cycle. It's a signal of institutional validation that took years to build behind the scenes. The infrastructure is done. The partnerships are public. The legal clarity exists. The only missing piece is ignition. And once those ETFs are greenlit, you're looking at institutional scale liquidity flooding into XRP for the first time in history. And that's where this gets real. Remember, an ETF isn't just a trading vehicle. It's a gateway for trillions of dollars that were previously locked out of the digital asset market. Pension funds, sovereign wealth, hedge funds, they can't touch an unregulated coin. But with XRPZ, they can. Once they can, they will, because every serious financial entity on the planet is chasing yield and liquidity in an era where traditional returns are drying up. When that money flows in, the ripple effect, no pun intended, will go far beyond the XRP price chart. We're talking about an entire restructuring of value transfer from global payments and remittances to securities, commodities, and debt markets. And the craziest part, it's not decades away. It's already starting. Ripple's collaborations with the World Bank, the IMF, and over 100 central banks aren't theory anymore. They're part of an active integration pipeline. But here's where most people lose the plot. They assume this shift will be gradual. It won't. The adoption curve in financial tech always looks slow until it doesn't. Think back to how the internet went from nerd hobby to global necessity in less than a decade. Blockchain's entering that exact phase right now. And XRP is sitting in the same position that early PayPal or Visa were before the explosion. So the question isn't if this happens, it's whether you're positioned when it does. Because by the time mainstream media starts covering XRP ETFs as the next big thing, the real gains will already be priced in. The heavy accumulation phase will be long over. That's why this moment right now, before the approval floodgates open, might be the final window before XRP becomes the digital backbone of global finance. And when we talk about the next 12 to 18 months, understand this. The alignment of ISO 2022, regulatory clarity, ETF adoption, and tokenization rollout is a perfect storm we've never seen before. The global liquidity reset is already happening in slow motion. And when it snaps, it'll be too fast for the average investor to react. You either saw it coming or you didn't. That's why I always say this isn't about hype, it's about awareness. The financial system is evolving in real time, and the winners will be the ones who understood it early and positioned themselves strategically. We're watching history unfold right in front of us, and most people won't even realize it until it's too late. And listen, I'll end it on this note. What's happening with XRP right now is more than price action. It's the blueprint for the next global monetary network, one that blends blockchain transparency with institutional trust. If you're not paying attention, you're volunteering to be left behind. So, as always, do your own research, think critically, and never invest what you can't afford to lose. This content is for educational and informational purposes only, not financial advice. I'm just sharing analysis based on verified data, not telling you what to buy or sell. Because when the dust settles and the system flips to this new digital standard, the only people shocked will be the ones who ignored every signal along the way. And I'll say it again,